Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey everybody, welcome to the stream. I just need to fix a few things here. That was the wrong one. Hold on. There we go. Sorry about that. Yeah, welcome to the stream. A bit of there's been some moves today. Here's the I'm in the dashboard. And since Saturday when Dane and I was streaming together, there's been some development in BNED. So I was thinking I will go through it a little bit today. There's been a transcript that I've read, 133 pages, with some interesting finds, and people have commented a little bit on it in Courage's article as well. So we will go through all the commentary there, and I will just point out there was a couple of evidence, or even more, but I thought it was especially two people that laid out pretty strong evidence for how the model is very efficient and how it works. So I was just thinking to point that out today in the stream, and I will go through a little bit later also. I know Dane has some interesting things going on, so I will explain a bit later about what that is. Go through a little bit. I'll just have to check that everything works. Sorry for being a bit late. I had to update the sheets and make sure that everything worked with the stream and everything. But I see that we have some viewers, so welcome to the stream. And actually, since Saturday, we had some even new subscribers. So thank you for everyone subscribing to the channel and everyone who's watching. So we really appreciate it, and feel free to use the chat again and get a conversation going. That's the aim of the stream. So yeah, let's just start today. I've already pulled up a few tickers, but I didn't find so much in the daily movers when I checked a little bit earlier today. I will go through it again just to see if something new came in the last hour. But as you can see here in the dashboard, there's a lot of things moving today, a lot of colors, especially here in the risk column. I saw rare earths. I saw some of the marijuana stuff. Virgin is sometimes you get these in Virgin, like the big gains and the big falls. But nothing too interesting in my opinion that I saw here. China internet is up a lot. Shipping, this is tracking Maersk, and yeah, a little bit of a pullback, and then maybe it looks a bit bullish, you know, here. And a nice gain since November, but yeah. Coal down, solar up, lithium, rare earth, like I said. Hong Kong is up, China, Brazil. Yeah. Nothing too much that caught my eye here, to be honest. But interesting to see if things are happening. Brazil. I pulled up the transcripts, and I was thinking to just spend the time actually today and just read through it, just a short bit of it, not the whole thing. That takes hours. But just the two people I was talking about that made, in my opinion, very balanced and strong case for the platform for BNED and how well it works. And then there has been some people against it too. And in my opinion, you have to read it yourself, because I'm just going to talk about what I thought about it today. And in my opinion, they didn't have very strong arguments at all for making it an opt-in model rather than an opt-out model. They were stumbling a bit, I think, in the words, the way I read it at least. I didn't see them talk, but while reading this transcript, that's how I read it. And they were stumbling a bit, looking for words. They didn't have logical arguments or good points other than they based it on a few experiences, which is fair enough, but I read it like those experiences also from a couple of the students that were on the call there. It could have been just like either that they have went to a bad university that didn't do the job properly, which can happen, and they aren't transparent enough. Or it sounded like they were just complaining a bit and pointed fingers at everyone else for being in their situation. I don't know. That's just how it come across to me. So I didn't think they had very strong arguments at all. I'm a bit scared of one of the ladies there. I've checked a little bit through it and checked her up, and I saw Courage also did the same, and they are talking a little bit in the article. We can go through it later. But it worries me a bit. And I'm not sure how it works in the States because I'm not from there, but it worries me a bit that the side that were so for the opt-in model were like pretty stubborn, and they were really, even if the other side had good arguments against it, you know, they kept going without any evidence. And then I'm just questioning, like, what's the purpose behind it? What's the goal here for the people who are opt-in on the opt-in side? And I'm not sure. That's something I have to look more into. But I thought I was gonna go through it today and just see, talk about what I found there. But first of all, let's go to the daily movers real quick and check if something new has been here. I don't think so. I saw there was a lot of banks and insurance companies today in the movers. Some insider buys also in the banks. And if we don't get enough tickers today, I was thinking even to go through the tracker or open insider also maybe. Just to see if something is catching our eyes. And by the way, since we get new subscribers, I feel like I need to explain a bit how the sheets work. Here on the left side, there's some color coding. The black ones means that I've checked them in the last 3 months, but not added them to the tracker. And the white ones means that I've checked them and that they are in the tracker currently. So all of them, I'm not gonna, even if they look good here and there's things that I like, I'm not gonna pull them up because I've done it in the last 3 months. And I have it sorted after percentage to 52-week low, just to get it a bit easier to see. To see what's currently trading close to the lows. So 3, I think I will pull them off. They are a bit far away from low, but doesn't hurt to check them out. Maybe we can add them to the tracker. Yeah, I think that's the only one, and I have a couple other ones. And of course, I'm going to start with BNED today because there's been some development there to check them out. Yeah, so here's what I have for fundamentals for BNED. And the fundamentals, they look on some things they look okay, but the thesis is more like if this platform that they have will work and continue to be as a opt-out model rather than an opt-in model. If you look at the chart, you can see that it was trading before the legislation talks. It was going up from today's level actually. And pretty fast it went up to a bit above 2, and then that report came out and it fell, you know. And this is where you got the new opportunity. And on Friday, this spike here was on Friday, and it went up to, what is it, like 131. It was 50% in a day, and then it crashed down again to, I think it ended the day up 8%. And then yesterday it went down almost 10%, and today I think it's down, barely down. It's barely up according to this. You can check Yahoo. Yeah, a little bit down, nothing to worry about, but I added to my position yesterday. I actually doubled my position. I sold out of a couple of other tickers. I have even talked about them on the stream. And I didn't sell out because I don't believe in them anymore. I sold out because to free some fund to get into BNED, because I see a higher potential there in the short term. And my plan is to hopefully that the tickers I sold out of doesn't run away from me, and that I can still get a position in. I sold with a little bit of profit in GTE. I didn't particularly like the news that they took up a new loan now, and the market also didn't react well to it. So I'm a bit more careful there, but I still believe it's a strong case. They are still buying back shares. It's just a little bit weird that I don't. It's a bit. I'm insecure about what they need that loan for, but maybe they have a very good purpose for it, and it will be too late for me to enter again. But it currently trades near where I first got in now, a bit higher, I think. I think I have 477 on my entry last time. And I sold off with a little bit of a profit here. But like I said, it was to fund my position in BNED. And I also sold out a tiny position in NCSM. So I got rid of those two from my portfolio, and I added to BNED yesterday. So just to be completely transparent about my positions. So right now I currently just own two again, Alto and BNED. And they are rather large positions for me. So it's going to be interesting. They in BNED, they have a new meeting this week, and we are paying closely attention to it. both Ranger Dayne and I and everyone else who is involved. And I am waiting for a transcript to come out again, and or maybe it's like I haven't figured out if they are live on a video stream or something like that. But it will be for sure interesting to see what happens there. Like I said, I liked a lot of the arguments for the opt-out model. I thought they were logical. I thought they were strong. They had numbers to back it up. They had experience to back it up. And keep in mind, this is a Obama-Biden, what do you call it, like a law to start with. And you know, Biden now, it seems just a bit weird that he will change it around again, because it has worked so well and the evidence is there. Like you will see when we go through it, that it has worked and been like very purposefully. And while I was reading it, I was thinking more and more that this is more like the real problem is maybe the transparency that the university, some of them has gotten away with, and they try to sneak in fees and stuff like that without being very, very clear about it. And I think that would be a good change and a good you know, addition to this way of doing things. And I think it's very much needed. But it seems to me that they have, like, that's actually the core issue rather than changing it to a opt-in model. So it's a bit where I'm still a bit confused by this whole thing, and people in the call was confused as well. They said it straight out that they didn't fully understand the arguments for an opt-in model. They did not fully understand what the guy was saying and what the purpose was. So there was a lot of confusion in the call as well. So I think that's interesting to see that they are confused just as we are. And I see Ranger Dayne in the chat now. I haven't told them yet, Dane, but Ranger Dayne has written an article, his first article on Seeking Alpha. It's still pending, but he submitted it yesterday and or the day before. I don't remember. And I know he has spoken with Courage about the situation and also about his article and his finds. And I'm looking for, I haven't read it. I haven't, he hasn't told me, well, we have spoken together about the finds from the transcript. So I know some of the points, but I haven't read it, and I'm looking forward to reading it. But Dane is saying now that his article is still pending. So I hope Seeking Alpha, get your shit sorted and get the article out. We need it for to comment on the stream, and we need more people to be aware of our take on this situation, because this has some potential in my opinion, and I know Dane and other people are also seeing the same. Yeah. But it will be submitted, and I'm waiting for it. I'm looking forward to reading it and go through all the points, and hopefully Courage and other people will engage in it as well. I know he said he was waiting for the article, so it's going to be very exciting, and hopefully Dane can talk a little bit more about it if it has been submitted on Thursday. But yeah, let's go to the transcript, and I my plan is to just read through this a bit, and I know my English is not the best, so bear with me, but I think it's just for a quick take. You have to read this if you want to invest in BNED. You should read this transcript on your own and make up your own mind. But I thought, like, it's pretty quick. It's not going to take long, but I just found these points very, like, super solid for having it as it is, as an opt-out model rather than an opt-in model. So my plan was to just quickly go through it here on the stream. But of course, do your own research. Even if I said I added this is risky. It's risky. It's also about the debt. They are very debt heavy, and they need to deleverage, and they need to renegotiate the debt and push it back a bit. But that's the thesis, that this model will generate enough cash flow to be able to do that. So that's what we believe in. But it is risky for sure. We can be wrong, and that's we have talked about it before, that we use stop losses. I think Dane also has put his stop loss a bit lower in percent. I mean higher in percentage than what he usually does, and I have done the same, because I don't really want to be stop lossed out around these levels, especially not now. I'm very positive about this, but I have some concerns about the language used by some of these people, and you get a little bit of a sneaky feeling that there's something else going on. But let's just wait and see. Anyways, this Mr. Lorgan guy, I'm just gonna read it. Yeah. He's saying thank you. So I wanted to answer Greg's question if I could. So he asked, what about the current regulations would prevent institutions from moving forward with this? So there's really nothing that would prevent an institution from moving forward with this, but it would potentially dramatically increase the price and difficulty to administer such a program. So in an opt-in, so let's, US Davis has 3,500 courses per term. So let's just take one course and it has 100 students in it, and we go to an opt-in model. That means there's 100 transactions that the institution has to do for those opt-ins, and 100 transactions that the publisher has to do to arrange for that student to have access in the learning management system to that content. In an opt-out model like they have here, there's operational efficiency built into the model, where every student gets free access to all of the content through the add drop period. And so then all of the students who choose opt-out, it's a 60-day opt-out period at UC Davis. You can make your decision and change your mind 10 times if you like. At the end of the add drop period, the students who opted out, all thousands of those, and unlike some of the others on this call, thousands of students do opt out at UC Davis. We send that one spreadsheet to the publisher, and they turn off the thousands of students access all at once in one transaction versus hundreds of thousands of transactions of individual students in individual courses, turning on and off access. So it wouldn't prevent, but it's an incredibly operational efficient model, and that's why I think we've seen prices decline year over year in textbooks since regulations went into effect. And I will add, for the 50 years before the regulations went into effect, every solitary year, the average price that students spent on textbooks went up. I thought that was a good point about the complications on a system level also to change it into an opt-in model. That I don't think necessarily these people have thought all the way through, before they suggested it. So I found that as a strong and solid case to keep it, and it's about being able to be efficient and also cost effective, that you save money here. Everyone seems to save a little bit of money, and that's the whole goal of this. And then the other one was this professor here. He is a mathematician, and he has some data to back up how well this works. Professor. So he is saying, yes, I can. Happy New Year to everyone, and greetings from Norfolk, Virginia. I'm Sharus Musavisade. I'm announcing that wrong. Sorry. Professor of Mathematics and Director of an Inclusive Access Program at Norfolk State University, NSU. NSU and HBCU institution is home to a significant number of first-generation college students, where over 90% of our students receive some kind of financial assistance. As chair of the Department of Mathematics At the time, I introduced the Inclusive Access program at NSU due to the fact that a large number of our students simply could not afford the cost of course materials, especially the cost of online homework software. I began the program with 49 courses in fall of 2018. It grew to include over 403 sections university-wide in less than 4 years. Today, the program encompasses all courses and sections at NCU with a flat rate of $25 per credit hour. No additions, no extra charges, flat 25. That translates into $375 for 5 classes, 15 hours regardless of the discipline. As professor of mathematics, I feel obligated to share some data on the success of our program with you. We surveyed 3,976 of our 5,300 students last academic year, and that is 75% of our student body. So they surveyed almost all of them. I'm happy to report that the saving to our student was almost $2.5 million. 92% of our students said the program saved them time in shopping for course materials, which is also an important point. The time efficiency that you can save, all the time you can save on doing this and get everything you need in one buy. 86% claimed the program better prepared them for their academic term. 83% reported that the program had a positive impact on their academic success. 91% found it convenient to have their course materials bundled and ready for them on the first day of classes. 83% felt the program provided them with more affordable course materials. 89% said they were likely to recommend the program to other students. Spartan's all-inclusive learning program, or the SAIL program at NSU, is today part of the culture of NSU. I conclude with expressing my highest support and commitment to the success of inclusive access program at the higher ED institution nationwide. And I truly am going to finish with a question for the committee members. Why are we questioning a very successful, entirely student-oriented program today? To change now is a travesty. Thank you very much for the time for allowing me to address you. And I thought that was a solid argument as well. And like I said, you need to read this yourself, but I didn't see any solid arguments like these two and others also from the other side. I just simply didn't see it. I saw the opposite, that they were fumbling for words, they were struggling to find meaning, and that they didn't have much substance. So reading this made me a bit, that's why I added, not only because of that, but this participated in my thesis of adding yesterday. But I'm a bit worried still for some of these people that were against it. We can go through the article from Courage and the comments, because they made some good comments below the article as well. So I'm just seeing Ranger Dayne is commenting here a bit. He's saying, I've been going through the transcripts from the original sessions, and one thing they make very clear is the idea of consensus, and that no majority vote can win exactly what they want. Yeah. They explicitly say any change in the way the law is written will come down to a consensus among those in the hearings, with an agreement or compromise to the way the law will be written going forward, okay? So everybody will have to be in agreement at the end of session with what is changed, being there's a number of members arguing to maintain the opt-out for its benefits. I would find it unlikely they would give up on this program. Yeah, that's a good find. That's a good find, Dane. If it is like this, I 100% agree with you. There's, in my opinion, there's no way that they would agree to change this as a opt-in model. But I think what they will agree on is that they need more rules about transparency from the universities, and that it's very clear that you can first of all choose to opt out. You don't need to buy all of this at the same time. If you don't want to, you can go to other places to buy it as well. You just need to opt out, and they need to make that very clear and easy. And they also need to make it clear that this is how much money you will save on it, and so you can get the opportunity to compare it to prices you can find otherwhere, and I think that's really the main issue here. But I'm not sure. There's probably some motivation behind both sides, you know. But I just find that the opt-out side has strong arguments to keep it, and I didn't see it from the other side. So there's some, I'm not gonna, I've read too much already. I'm not gonna bore you with this stuff, but go to this article if you are interested. This is the latest Courage and Conviction article. And there's a lot of comments. Go through, there's very good comments and discussion here. There's definitely, like I've said before, it's risky. So there's risks to consider here, but if you take the time to read through this, I think you will be able to reach a conclusion on your own based on all the information you have here and all the links, and if you like really dive into it. And I see Dane has commented a bit. I just saw, and there's a guy, this guy has made like a document that you can download, where he kind of summarize what the transcript and the whole situation. So you can download it for free. There's a lot of good things here. I'm just trying to find this Spark link that I saw. Here. So this is an organization that was represented by this lady Allen, I think her name was, that were against it. So this is and I think my next step will be to check a little bit more about the background of these people, and see what's going on there, see who they are. I don't know this. I don't know this organization or these people. They seem to be fighting for like free education, which is of course in itself not a bad thing. We have that in my country, and I am for that model, but you still need to buy books and stuff like that, you know. So I'm and I know it's completely different in states, so it's stupid to compare, but in itself, like this mission, I'm not against it, but I have to question a bit the motivation behind it. And I know in the article they have talked a bit who is funding this organization, and they have found some interesting links already, and that's why I urge you to actually read the article in the comments, so you can check it out for yourself. You saw here they are backed by some of these people. I haven't looked too much into this yet. I haven't had the time, but there's a lot of good information. And this is the girl Nicole Allen. She was on the call. And I just the way she was speaking when I was reading, it's like it just bothered me a bit, because it came across like she was I don't know. You go and read it and make up your own opinion. You have something to add, Dane? Just feel free to post it in chat and I will read it up. But yeah, first thing I noticed, there's a lot of women here, which is not a bad thing at all. But there's very few men in the committee and everything here. And I haven't had the time to look into these people yet. I checked her out a little bit. I read her stuff here, and you can see that she has been successful in some of these changes before, where she works students across the United States to organize grassroots campaigns and higher education affordability and related issues. Throughout her 7-year tenure, Nicole was successful in passing state and federal legislation to reform anti-consumer practices by the textbook publishing industry, and authored 2 seminal reports on digital textbooks and the impact of costs on students. So she probably knows her stuff, but yeah, I must say the way, and she lists her Twitter there also. You can go and check everything out on your own. Not gonna dig too much into this on the stream, but just a foundation of where you can start and where you can get your information. Yeah, so BNED is now my second largest position. Now I only have 2 again, but it's a large position for me, but it's still number 2. And it was very exciting on Friday when it went up 50%. And I think it went up initially on the news that the new document that they released after this meeting that found place that I'm reading about with the transcript. They released a document, and I think the initial spike in price of BNED on Friday was based on the language and the changes in that document. And then I think traders and stuff like that, that it showed up in their radar, and it was 8 million in volume. And I think the average is 1 million. So it got traded up. Yeah, 1 million. If you see here at the volume on Friday, 8 million. So it got traded up a lot, and but it fell right down again. When it was pretty for a long time between 30 and 50%, and then as it reached the closing hours, it fell to like 20 to 10, and then it ended at 8% up, I think 7.8 or something. So that's of course a bit disappointing for us that were owners, that it didn't hold up. But I think that was just a trade, and then of course it fell again on Monday. And it fell hard on Monday, 10%. But I saw that as my chance to average down a bit and double my position, so that's what I did. And who knows? We just need to pay close attention to this, and keep in mind we have stop losses. We try to protect the losses if this turns around. It's right here now at the lows, so it's not too comfortable at the moment. But I believe this. It shouldn't take too much for this to turn around and establish itself over $1, in my opinion. But let's see what's happening. I'm looking forward to Ranger Dayne's first Seeking Alpha article, or first article ever, I think, in terms of writing about the companies. So I'm looking forward to that. Keep an eye out and follow him on Seeking Alpha. Maybe he will write more. But yeah, that's what I had. There's way more arguments in this transcript than the 2 I pointed out. They are very good, all of them. So I urge you to actually go through and read it. Took a little bit of time, but it's worth it. And make up your own opinion. Yeah, then we go into the fundamentals again. Let's check out free then. Free is the first one. down 8%, 8.5% today. Decent market cap in terms of what we tend to look for. Share count a little bit up the last years. I don't have too much history here. On the data. Negative tangible book, but it trades below book. Has some excess cash, also some short term, but it can't cover it with that excess cash right now. See, the margin is a bit all over the place, but on the average has dropped a bit. Negative earnings also on the average here. This is 3-year average. They don't pay dividend, and the debt, after Corona they have taken on a little bit more of debt, but it's a bit down since 2022 to 23. Shows up as levered here, and keep in mind that my sheet then issue shares, so these numbers are a bit diluted. But I don't think this cash generation is not impressive, and this needs more. It just needs more. It needs more history, and it needs to prove itself a bit more, in my opinion. Like straight off the bat here. Okay, the book value here is good, but you can check what they actually have on the balance sheet. They have a little bit in cash. 55 approximately in property, plant and equipment. A lot in goodwill. That's why you see tangible book being so much different than book value. Those two here. Long-term debt 420. 420. They don't have preferred, and the notes to the debt. They have term loan due in 28, revolver in 26. They have paid it off a little bit in last year. I'm trying to improve this kind of language. This language is hard for me. I know Dane has more control of this stuff than I do, but I'm trying to learn and understand all this stuff. But it just looks like they have depth and that they are paying it down and that they have time. You know, if the maturity is 26 and 28, but I saw the near term was 12 million. And on the, you know, they have some cash here on the book, so I'm not worried about the near-term debt here, but it's pretty levered long-term, and I would need more cash generation, which it doesn't have. And let's check the margins. I forgot to read the business, but we can go through it soon. Yeah, see the margin on the single years. Cash generation is up a little bit. Had a poor year last year in terms of that, and the gross profit is down as long as the net income and the EBITDA ratio. That's not necessarily too good. But Whole Earth Brands operates as a food company. The firm operates through the following segments: branded CPG and flavors and ingredients. The branded CPG segments include tabletop zero-calorie sweeteners, category products. The flavors and ingredients segment manufactures licorice extract and derivative products. Its brands include Equal, Canderel, Whole Earth, and Pure Via. Okay, so food company. I saw there was some insider last 12 months. Big 10% own purchase here, but it was in June of 23, so it's a little bit ago, and you can see it was way less than the first or the other purchase they have here. but the price was around the same, and they are up a little bit on both of these purchases. So so far it's been a good investment for them. I don't know that firm, by the way. Free. Oh, the ownership is messed up again. I'm not even sure if this is the correct. Are they? No, they are in Chicago. I don't know. I'm not interested. This needs more. This needs more. It needs more time and it needs to prove itself, and it needs more cash generation. But let's see what some people on Seeking Alpha have said. Because it's down today. Very little comments. They also talk about the insider here. The CEO resigned. Not interested in this. I'm not gonna add it to the tracker. Needs way more. It needs way more for me. The next is PBI, and PBI is something I owned in the past. Justin is on the ball here. If you go to Seeking, he has. There was a new article from him today. He has written a few articles of them before. You can see it's 18% to the 52-week high. But it got pretty low here back in it's a while ago now, but September of 22. And of course you should have bought there. I think the thesis here now is that there's a new board. There's new people in control, and it's some of the same people that were involved in the GameStop story. Hestia and Kurt Wolf or something like that. Justin is pointing it out in his article. There was one from Horizon today as well. So 2 articles today, and they both have a buy rating. I think it's very interesting what's going on in PBI right now. Justin's bullet points are Pitney Bowes adds Bill Simon and Jill Sutton to the board of directors, giving activist investor Kurt Wolf control of the company. Shareholders should expect a permanent CEO appointment and an imminent sale of the global e-commerce segment. The sale of global e-commerce, I guess that's what it is, could significantly increase Pitney Bowes' net income and unlock shareholder value. So it's a near-term catalyst right there. The company has a multitude of opportunities to increase net income and deleverage outside the sale of GEC. And even if Pitney Bowes were to give GEC away for $0, I believe shares should trade up to at least 10.72, which is a 164% premium to today's price based on a 10 times PE ratio of the remaining company's estimated earnings. And he goes through pretty good here, the whole situation. So he's saying, like, when Kurt Wolff convinced Bill Simon, a non-Hestia Capital appointed director during their time at GameStop, to side with Hestia Capital and settle with Ryan Cohen, that settlement effectively gave Hestia Capital full control of the board of directors at GME. Now, years later, Bill Simon, ex-Walmart CEO, joins Kurt Wolff at Pitney Bowes and effectively becomes Kurt's majority vote to make the meaningful change that shareholders need. So this is a big deal, and I know they have been waiting for them to get control for a while, and now they have it. So they are very positive on the outlook for PBI. I have it in my tracker, and I'm following the price. I'm even tempted to, if I had some money to pull into stuff, I would be tempted to. Maybe it's a bit high now, but you know, I have paid attention to them closely, and I've seen that there has been some opportunities here in the past, because this news that has now finally happened, it has been a conversation that this can potentially happen for quite some time already, and Hestia has, like, they've wanted to do this for a while, and now they finally could do it. So I have thought that I could have added a few times, but I didn't do it. I didn't have the money, and I prioritized other things. But yeah, that's kind of the short take here. Again, read on your own these articles. I know Justin has another one. I haven't been able to read through it today. I just saw that he posted, and I have followed him on Twitter and his updates and stuff like that. So I'm a little bit updated on the story here. But you see, Justin has a couple of other articles as well. And I know he has deleted his YouTube videos, but on his Q&A there, he also spent a lot of time talking about PBI, and he also admitted that one of his earlier theses were wrong. Simply, he said I was wrong about it. So it hasn't gone fully to his plan, but you know, Justin is always long term, and he's looking a bit more ahead than maybe a lot of other people that invest. And for him, I know it has paid off tremendously. In my opinion, he's an excellent analyst and investor. Invest. Yeah, I just thought I should mention PBI. We don't need to go too much through the fundamentals here, because there are other things. The fundamentals look all right and even good, but there are other things in play here now with the new people in control of the company, and it's an activist investor also that obviously has a route and a plan to unlock shareholder value here. So yeah, interesting development. And I saw some guy was asking Justin if he thought they would cut the dividend, and he just said no, because they just announced it. So that was like not an option. You know, if they cut the dividend, it's usually send the price down a bit, because a lot of investors that are looking for the dividend are leaving them. Yeah, next one is TLYS. I saw there was some insider buys here, pretty big ones too, over a period of time, not all in one purchase. TLYS I have in the tracker. Pretty steady share count. They show up as leverage, but not too much. You see it issues a few shares here. Trades a little bit above book value right now. This is a clothing retail. Cash is not too good this year, but that's how you get the opportunity. Trades 18% to the 52-week low, and if you look at the chart, He has done a little bit up and down. It was a bit lower here back in June. But then, like overall, a little bit of sideways movement here. You know, you get some of these spikes and then down again. And you know, this is about, in the time we are in now, maybe people will eventually finally get a little bit more buying power again, which will maybe turn this around a little bit, like the sales and all that. You see the margins are a bit down, cash generation has been a bit off, but they had some good years here in past, and this 2021 year is sticking out as a really good year, but maybe a one-time off. So if you look at this is why you have the 7-year average, and I tend to look at that actually a fair bit. They generate operating cash flow on like $1 on a 7-year average, and compared to the share price, it's not too bad, that I think. And also positive free cash flow on a 7-year average, also on a 3-year on both. So historically, they generate cash, you know. It seems like they have cut the dividend and earnings are bad this year. But on the 3-year average, or up and almost $1. But I actually think right now that this looks a bit like fairly priced right here. But at the same time, if this will turn around, this is probably the point you want to get into this, because when they have turned around the story, it's too late. But obviously these people buying this fund one investment, they are buying, it's not a crazy amount, but you see they have multiple purchases all the way here, so it adds but look, historically they bought way more in single purchases. If you go back to just last year, they bought like for millions every time, and they seem to have been, what was the price now, $7.40? You know, they bought above that price multiple times with these big ones, and then of course they seem to just keep buying, but their cheapest purchase was probably here at $6.10, and they bought a fair amount there too, but so far they are probably not too happy with this, but again, they can be well positioned if this starts to turn around, which it can do. And what are people talking about this on Seeking? There's some sell ratings, hold ratings, a little bit along the lines that we saw. There's been a CEO change. Recently now, January. Recently now. Not too many comments on these articles. But there's talk about this big shareholder, and talk of a buyout from them. What is it on Whale Wisdom here? So these are them. What else do they own? So TLYS is their third largest position. and they own 23% of the whole company. What is this fund? I hate it when I don't find information on these things. It's just like the holdings and stuff like that. I like it when I can go to a website and read about their style and see the faces of the people involved and everything like that. Okay, who else owns it? Shay, not heard of them. So obviously these people are by far the biggest owner. Let's check the other. It's 2% here, so I guess the insiders, they don't own too much of this company. Also, they have a little bit of a messy structure. Class A and Class B shares. And this fund, they are owning 23% of the Class A ones. While this guy here, did we see him mentioned in the article? Former CEO, Mr. Shakin, interim CEO. So this is a guy. This is him. He has a lot of these B shares and a lot of voting power. And this is also him. I'm not sure if you can see this. Should zoom in. And sorry, I'm just reading the point number 6 here because that's attached to this Shaked guy. Shaked. He has a lot of voting power then. Anyways. It's interesting with the fund and maybe that they will try to take over and buy the company and everything like that. But I think I will just keep this in the tracker and let's see what I wrote about them last time. Look over there, generating cash and seem to have control of the debt. Lots of inside buys lately. Okay, he owns, yeah. He has increased then. Yeah. Somewhat flat. They've improved revenue. Equity growth is flat. Alright, so... oh, yeah. Oh no. Now it seems to work fine. Yeah, there's been some development since then. When did I write that? Yeah, a long time ago, 25 of September 2022. So I've had them in the tracker for a while. So there's been obviously some development since that. We can see what I was seeing here, like a little bit flat, right? And then of course it turned worse from 2022 to 23. And what was the price when I added? 706. So it's actually up since then. But I said I wanted it cheaper, like 650. And 650, I think 650 was like here. I mean, 650 looks like a place where you would be more interested in this again. But it may not go down there and you may miss out on the gain. But I'm just a bit worried about this decline in the operating cash flow. This year is minus, you know. Last year also barely on the plus side. And they had to cut the dividend. So it seems like maybe they are doing things to try to turn this around, but there are just I see other opportunities that to me looks a bit more attractive than TLYS right now. So I think I'm just going to keep them in the tracker and pay attention to them a bit longer. If it drops more, maybe. And you should check out the fund, that activist fund, and see the development in that story. But yeah, let's move on for now to DXLG, which is also a clothing brand, I think. Look here, shows up as safe. That's good. Share count a bit down actually from 22, but overall a bit up since here. You see the cash generation has turned a little bit positive. Oh no, I see it's loading now. So hold on, let me just try to update my. Oh, it's coming. It's coming. I don't have the description. I can find it another place. Sometimes that happens, and it's not because I have too. Well, it says it's because I have too many, things being pulled. But if I just exit now and I go in again, it will fix itself. It usually does that. But I'm not gonna bother now for the stream. I have the profile here. So Destination XL Group, together with its subsidiaries, operates as a specialty retailer of big and tall men's clothing and shoes in the United States and Canada. Its stores offer sportswear and dresswear, fashion-neutral times, including jeans, casual slacks, t-shirts, polo shirts, dress shirts, and suits separates, and casual clothing. It also provides tailored related separates, blazers, dress slacks, dress shirts, and suits, and vintage screen t-shirts, and wovens. Never heard that word in my entire life. Wovens. Probably pronounce it wrong too. On the various private labels, the company offers its products on the trade names of Destination XL, DXL, DXL Men's Apparel, DXL Outlets, Casual Male XL, and Casual Male XL Outlets. Okay. Clothing brand, clothing store. Some insider buys, I see 12% ownership from the insiders. And when then, of course, you open it, you see some sales here straight away from the same person. This Jack Boyle guy has bought a little bit ago. It was in August, almost September 23. A 10% owner also selling. So they have, you see a lot of selling here, and the last like purchase period was here in 21. But look at the share price then. It's well above that now. So these are good purchases, you know. So I don't blame them if they have sold later on and taken the profits. That's kind of what you want and what you are after, you know. But yeah, it shows up as safe. They have control of the debt here. They have some excess cash there, but also some short term. But it seems like they know how to cover that. 6% short interest. It's a little bit weird to me, like just initially here. But let me go through it. Maybe not. It seems like a good year here. Almost $1 in operating cash flow. And look at the capex. It's not. It has gone up, but it's not too much, and you get free cash flow at 80 cents. Then of course when it's almost $4, it's not insane, but it's not bad. They don't pay a dividend, and they have on the 3-year average they have 83 cents in earnings. So I think like just straight off the bat, I look at this and. I'm thinking it could, you know, it could double, like 7, 8. If this continues, they need to maybe bump up the book value a bit here. By a clothing brand, they have a lot of inventories and stuff like that, probably. $100 million there. They probably have leases, right? Yeah, most of them are leases, so that's also they have control of this debt. Yeah. It doesn't look extremely good, but it also doesn't look too bad. This, in my opinion, look at the margins, seems to be up on the average. A bit all over the place here, but now maybe it starts to flat out on 50 on the gross profit margin. Net cash flow is a bit down this year compared to last year, but the operating and free cash flow is both are up. Netcom pretty drastically down just on the single years. Here are the 3-year averages, and you can see the net cash flow is also down there. The rest are up actually. And they seem to have like these 3 last years. It's not too bad for this company. And where was it? Like I said, yeah, 7, 8, right? 7, $8. These people are buying. You know, down here, probably. I may add this to the tracker. Not a super high conviction thing, but just interesting to follow. And 12% it says from the insiders. It's a fund who has 15% of them. Oh, here, this is what I want. Okay, so they have 11, what did it say? 12, okay. This guy owns 5%. He's a director. Harvey Counter owns 1.3. Family Foundation. Let's check whale wisdom on these ones too. What? Can't find them. DXLG. Yeah, so here's that one. So it's their second largest position. I haven't heard about this fund before. I'm going to check them out. 6% of the portfolio. I'm just going to check if I know some of these other tickers. I've seen some of them. Love, we have talked about Love here on the stream. They have a lot of positions too. So that the fact that that's their number or their second position, it says something. Investment company. Another one where you don't find the website. A bit annoying. But I think that's interesting to see that it's their second largest one. Market value of 42 million. Because you see here, they have a lot of positions. $120 positions in total. Well, they have sold out now. That's the filing, right? Yeah, something to pay attention to, I think. Who else you got there? You got these are probably one of the ones we saw here, right? No, Holtzman, no. Was that the family fund? No. Anyways. But this one again. They were involved in TLYS, right? Yeah. All right, so they are involved here too. All right. I will add them to the tracker just to have them there. I like I can go through what I like. I like that the drop in share count here. I like that it shows up as safe. I like that they have historically, cash generation here, and this year has been good for them also. Margins are a bit up on the average. They trade above book, so you see the things show up here. I would like to bump the book value a bit, but it's okay. And they have a lot of leases on the stores and stuff like that. They don't own them, It's down today, and it trades 5% to 52-week low. And a little bit bearish on the chart, but you can see that the support level, it's going to be interesting now if it breaks below it, and that's why I add them to the tracker, They seem to have full control of the depth. Revenue is a little bit flat here, but up on the average. So I like to see that. The earnings positive. So yeah, they just seem to need to prove themselves and continue. And maybe if it breaks the 52-week low, that you can get a buying opportunity here, which is kind of why I want them in the tracker. Sorry, I'm just typing in all of this. Good price. What did I see on the chart here? It's right here now. I think on the fundamentals, I can see like 7, 8, 9, maybe. So today's level isn't a bad entry, but I always want it cheaper. And if it breaks that one, we forgot to check Seeking Alpha, I think, on this one. On the value gem in Big and Tall's clothing business. This was in October 23. Not a lot of people are commenting or writing about this. Well, there's some articles last year who all has a hold rating. I saw this guy has written 2. Let's check how it has performed since that. He's down on it, on both of them. This guy is almost 50% down. He might not be 50% down, but it's 50% down since the article was submitted. Everyone's down on this. And that's why I say that if this breaks below 52-week low now, it might go further down, and that's maybe what can create the opportunity. And I like, let's put in $3 then, just to have something to aim for. It doesn't mean that it will go down there or anything like that, but I'm okay with that. I'm putting a low rating here, not because I don't believe that it will turn around, but it doesn't. It looks good, but it doesn't look. I think I will change it maybe to medium. Doesn't really matter. I don't pay attention too much to on those things, but it doesn't look. I would put attractive fundamentals. I don't. And I will say control of the debt, improved margins, right? Improved margins on 3-year average. What was the position they had there? That fund had them as number 2, right? AWM Investment Company holds them as their second largest holding out of 120 holdings in total. They generate cash, but trade above book value right now. Earnings positive. And their share count has dropped since 2022. Wasn't that correct? Yeah. Currently trading close to 52 week low. Pay attention to a drop in price. Save. Okay, so here they are. Good to have them in tracker. While we are here, we can go. Actually, I've done that before. Something I haven't done on the stream is to go through like the actual Open Insider website before, just to see. And I have this as a shortcut, so they have some settings already installed here. But I just want to go through some of these, and I like that they have the chart here, but I would want them to also list the market cap. It would be helpful for someone like me, but it's okay. I can quickly check it out. I have some shortcuts. I can just highlight this and go to, for example, Market Watch, and you get the market cap and everything in the information here, you know. There's the market cap. And for some reason, Yahoo, that I usually use Yahoo, but for some reason it doesn't work. It doesn't work on with this shortcut, so I've stopped using it. I have to use Market Watch instead. So it's not a big problem. And I just like to go through the charts and see if it's like if it looks bearish. You see Buffett bought here. Look at these kind of numbers. Holy shit. Oxy again. And what I'm looking for now is just like the amount of purchase, and then I go and see if I know the ticker, and if I don't know them, I just hover above and check the chart really quick. Look at that chart. There's been a lot in this Wolf company. 3 billion, bit high. What is the what kind of company is this? Semiconductor. All right. From the directors, and when you saw the chart, you should pull up Wolf. You know, we had a wolf close to where I live a few years ago. Was walking in the streets here. Wolf speed, yeah. You saw that TLYS. That's how I pulled them up today, because I saw the inside buy here. Bioscience, nah. Expensify. We saw them on another stream, right? That chart doesn't look good. Did I add them to the tracker? I don't think I did. EXFY. Oh yeah, they are there. They are in the tracker. Oh, it's a why. Oh yeah, now I remember. We pulled them up because I saw a drop in the tracker sheet, so we pulled them up again to update ourselves on the information. I just wanted to check the chart. Oh yeah, yeah, I remember now. It's one of those. A bit hard to go off the chart here. Nah, keep moving. I'm pulling them off. VCSA. PBF. Remember we did PBF on the stream? I think I'm gonna go through those two, and then maybe after we will finish for today. I don't want to run too late today. But it's good we have added something to tracker, and we have tried to update a little bit on BNED. And I'm sure Ranger Dayne on Thursday will give you even more information on BNED, and maybe things have happened till Thursday as well. And also maybe his article has been published, hopefully. That would be cool to have it and comment on it. It's a wolf. I see the insider buy, but straight away, not too much is interesting here, to be honest. I bet they have some short interest. Yeah, almost 14%. My sheet is a bit slow today, so but it's okay. I have most of the information. They have a lot of cash though. Nah, not for me. And the other one here, they don't have too much data. But I would like to see what kind of company this is. So they have a rental management. All right. Also, it's a website for holidays. Big bump in revenue, but I don't really trust these numbers when there's so little data here. Just gonna go through the tracker real quick here at the end. I want to sort it by percentage to 52-week low. And you see a lot of stuff in the tracker is trading close to the 52-week low, and you will see in the tracker both like the metrics are better than other places that you will see in the stream, and a lot of things will trade low. That's what we are looking for. So, and what I'm checking now is just a few things. I'm checking the percentage here. I'm also looking at the potential, how it has been in the past, and I'm looking at what I have set as a good price entry. I'm not calculating that too heavy. It's just something that catches my eyes, that like has dropped down, because usually that means it has dropped a fair bit since I added it, which then may be a cause for to say that there's opportunity here. That's all that does. So I'm looking at a few things here. CRK, FF. I kind of like FF. I think Courage has an article on them from before. GLT, we did them in another stream. FTK, and I'm also looking for inside buys here. I'm kind of waiting on this bow company to drop, but it's pretty steady since I added it. I kind of like it. Bra is a one we have checked before. You see GT shows up here now. EXFY, we just checked them. And BNED is also lighting up here in my sheet. I don't want to check out pets. Just quickly, this will be the last one, I think, guys. I will have to wrap up after this, I think. My shit seems to be a bit tired too. It takes a while and has some loading issues, but our legs out on the track now, and yeah, this will be the last one, I think. Now I'm pretty excited about BNED. I'm even considering if I get the chance to add even more, but I want to see a little bit where this is going and the language they put out in those drafts, and try to interpret which way they are leaning in the end. That's kind of the whole thing, right? And of course, we can be wrong here. There's, like I mentioned, there's risk in BNED, for sure. And it's not like you shouldn't calculate, you shouldn't ignore the depth or the risk or anything like that. And we are not doing that. But we just try to weigh it and compare it to the potential. And the move on Friday was a big move, a lot of high volume. So pets trades at 6. There's been some insider buys. Not too much, but something, you know. They have net excess cash per share, 51 on the books here, and short-term debt is only 1 million, and they have no debt other than that, so they show up as safe. A little bit of a bump in revenue last year, down on the average, and you see 2022 is probably why, you know. The margins has taken a little bit of a hit since here before the pandemic. And equity growth is also stable and now leaning a bit down. It trades at 6, cash generation at operating cash flow $1, free cash flow almost $1, 85 cents. They do pay a dividend, and historically too, a pretty high one as well. Negative earnings for the year, but on average 60 cents approximately. They have done some acquisitions in the last couple of years. And you see the cash they've had here has gone down. Probably that's maybe they've used the cash to buy up something. And like I said, this is already in the tracker. And straight away, I want it even cheaper than what it is now. This chart doesn't look good. It's just constantly going down in a long trend here. So something of course needs to change. You can see though, it's a bit interesting here how long it has been oversold. And that is of course like a little bit of a red flag also. Hold sell ratings. Not many comments. Tree would be a good fit, yeah. Could be. This is like medical things for pets. But look at this. I've been hoping for some time and have now lost patience. And I understand why when you look at this chart. And it's a bit weird to me that they haven't turned it around. When was the buys? At 7, 7:30 and 7. Now it's 6, so that's not a good buy so far. Look at this though. A long time ago, of course. This was trading at 42. Yeah, back here. That looks that doesn't look like a good chart now in recent times. They don't seem too impressed of management. The revenue is up, but also the costs. And did they say they cut the dividend? I didn't see that. Yeah, they suspended the dividend in October 2023. $50 million cash, zero debt. We saw that could be a turnaround story. Yeah, could be. I just want it even cheaper than what it is now. And oil, I didn't see that before now. There's almost a 20% short interest here. That's something to keep in mind. What did it do in October? It's down since then even. That was here, that drop. It dipped below what it is today, but for the week it ended at 730. So it has dropped since then, you know. Not so impressed by management here, it seems like. But okay. All right, everyone. Thanks for watching. Thanks for tuning in. I'm looking forward to Thursday to see Ranger Dayne's thought on BNED. And I'm looking forward to his article. And I'm looking forward to updates on the recent development there with the meetings and everything. And if you are interested in BNED, pay attention to Courage and Conviction and his articles. There's some really good discussions in the comments there, I think. So I'm going to pay attention to that. And I need to try to figure out like the funding behind that Spark organization and the motivation behind their arguments. Because that's important, I think, to know where you have those people. But yeah, I hope today brought some updates on the meeting they've had in the past. And like we said, they started a meeting again yesterday and will finish like 8th of February, and I think that's on Thursday. So hopefully we have seen some new news before then. And like you saw on Friday, things can happen if you interpret some good news here. So yeah, that's it for today. Thanks for watching, everyone. See, Dane will see you on Thursday, and we will do another one together like we always do on Saturday. So yeah, thanks again. Bye bye. See ya.